$5,000 investment grows 17 times over 30 years. That's a 1,700% return. Out of that $1.3 million, $1.2 million comes from the magic of compounding. So, essentially, 94% of the return comes from letting the original investment of $75,000 grow over time. Good day, aspirational investors. Welcome to the Deep Beat channel, the financial edutainment channel for millennials. We turn complex finance into music and wisdom. If you have the opportunity to watch my other musical video about $7 a day, this is the sequel video in detail that explains how $7 a day turned into $1 million. In this video, we will use a real-life example to validate that investing with a small amount can turn into millions, and to prove that saving is riskier than investing in the long term. So here's the simple math. If you save $7 every day, that works out to $210 per month. Over the course of a year, $210 per month will grow to $2,520 annually, totaling $75,600 after 30 years. It is a straightforward calculation. Now, for simplicity's sake, we're rounding this off a bit. So let's say $200 a month or $2,500 a year, which totals $75,000 after 30 years. Easy enough, right? Now let's see how this could really grow if we put that money into the stock market. To do this, I'm going to use an asset allocation tool that helps us backtest the market returns using real historical data. So if you open the app with me, you'll see the screen here. I'll select the investment period from 1994 to 2024, and for the sake of the tool, I'll put in an initial amount of $1 just to fill the space. Then I'll input $200 as the monthly investment. Now here comes the fun part, creating the portfolios. I'm going to make 3 portfolios. Portfolio 1, 30% Apple, 30% Microsoft, and 40% Walmart. Portfolio 2, 40% Oracle, 30% Coca-Cola, 20% United Health Group, and 10% Altria. Portfolio 3, a mix of stocks from the first 2 portfolios, 15% in each of the 7 stocks, except for United Health Group, which I'm leaving out. When I hit the button to analyze the data, the app shows me 3 colorful portfolios, and each of them ends up with over $1 million in value after 30 years. Portfolio 1, Apple, Microsoft, Walmart, grows to about $4.6 million. Portfolio 2, Oracle, Coca-Cola, United Health, Altria, hits around $1.3 million. Portfolio 3, with the mixed allocation, reaches around $3.1 million. But let's get real for a second. Just saving $7 a day and putting it away in a savings account won't result in $75,000 being worth the same in 30 years. The actual average annual inflation rate in the United States from 1989 to 2019 was 2.5%. But let's keep the average inflation rate at 2% a year. That $75,000 won't have the same purchasing power it does today. In fact, according to an inflation calculator, that $75,000 saved over 30 years will only be worth about $41,000 after inflation. This shows how inflation can eat away at your savings over time. Here's where the magic of compounding kicks in. Even if we take the portfolio with the lowest returns, Portfolio 2, which ends up with $1.3 million, the initial $75,000 investment grows 17 times over 30 years. That's a 1,700% return. Out of that $1.3 million, $1.2 million comes from the magic of compounding. So, essentially, 94% of the return comes from letting the original investment of $75,000 grow over time. But here's the kicker. If you just save your money and don't invest it, you're looking at a much smaller final value. Instead of $1.3 million, you're left with just $41,000 due to inflation. The best way to combat inflation's impact on your wealth is through investing, making saving alone riskier than investing in the long run. This is a remarkable outcome of small but steady investments spread out over 30 years. You can watch my other musical video to learn more about this concept in the musical version. Furthermore, we also create a podcast about challenges and risks during the 30-year investment period so that you can understand it from a totally different perspective. You can listen to the song and podcast on Spotify. Thanks for watching, and see you in the next video.